Good morning, everybody. I'm John Giardinelli. I'm Association Counsel, and we're here for this month's rant. Today, we're going to talk about the California Association of Realtors business meetings, as well as some other items that have come up. I want to let y'all know that we're going to have a couple of important and deep dive discussions in the near future. We're doing a brown bag, and we're going to have a legal panel. Legal panel is going to include the attorneys from the Department of Real Estate. So check your local listings for times and dates, and we'll look forward to those two events. We went to the legal affairs meeting, and it was very interesting. There were a couple of highlights. The one thing I want to emphasize is we went over all the recent cases that have come down. Most of them don't have anything to do with a real estate profession or realtors. They were mostly procedural issues relating to conducting arbitrations and the like. But there was one case that I thought was really fascinating. It was the Coyote Aviation case. Had to do with an option on a airport. Um, but the principle that came out of the case, I think, is important to all of you. In that case, what happened was the people with the option were told by the people that own the property, don't worry about recording or providing your notice in accordance with the contract. There were some issues with, getting the notice of exercising the option. And once they exercise their option late, according to the written agreement, but not according to the verbal conversations, they were then told by the authority that owned the airport, we're not going to agree to allow you to move forward. They, of course, filed a lawsuit and claimed that the contract had been orally modified, and the court ruled against the optionee and in favor of the landlord and said, no, if a written agreement has a paragraph that basically says, which most of your contracts do, that must any agreement to change or modify the terms of the agreement, if that must be in writing, then any modification, which in your case would include extensions of contingency periods, could include extensions of the time to close escrow, or if you're dealing with a lease or something like that, must also be in writing. So it's important for you to understand that if the seller, say, for example, is going to allow some additional time to remove contingencies, or the parties agree to extend the close of escrow past a certain day, you need to put that in writing. And of course, C.A.R. has numerous extension forms for that purpose. I'm not going to go into any great detail on another change, but we went on a pretty deep dive regarding the current situation with the law and homeowners associations. I just want to point out that there have been some recent code changes that deal with liens, with fines, with hearings, with disciplinary matters, with short-term rentals and Airbnb rentals, and ADUs. I'm going to go over that when I have more time when we do the brown bag, but I want to emphasize that if you're dealing with an HOA, it is critically important that you provide the HOA advisory to the buyer, which covers all sorts of cool stuff, and that you also make it a point to advise the buyer that they need to contact the management company or whoever is in charge of that particular HOA if there are any questions that come up. And of course, if you have some special knowledge regarding an HOA because you either live at the property or deal with that particular HOA all the time, then it's important for you to disclose whatever information there is. But again, we had this phenomenal attorney come in talking about HOAs and what's going on, and it's very fluid, so you need to be aware of it. I'm on 3 boards here in my hometown and of HOAs, and and we're constantly dealing with changes and all of that. Um, Although it was San Diego, we had a luncheon speaker, and he was the district attorney who's in charge of fraud. Now, while he was dealing specifically with real estate fraud in San Diego, having dealt with these issues in the past, unfortunately, I'm aware that a lot of the same issues apply everywhere. So, the top frauds, unfortunately, and not surprisingly, are committed against the elderly, uh, caregivers who put themselves in positions where they can take advantage of someone who doesn't hear from their family very often and is in a position of vulnerability, people that respond to emails that are what we call phishing, phishing, where the email is actually sent by a fraudster. There's a minor change to what is a legitimate email address, and the person falls for some type of a scam. Outright fraud, where people are actually stealing a title or recording phony deeds. And then, of course, a problem we've been dealing with now for a couple of years, which is hacking into emails regarding escrow deposits and escrow distribution. And so be careful about that. Speaking of escrow, I know there's been a lot of conversation lately about some issues relating to a joint bulletin that was issued recently by the Department of Real Estate and the Department of Financial Innovation, which governs escrows that are publicly held. As you probably know, broker-owned escrows are governed by the Department of Real Estate, whereas public escrows are governed by the financial department. They recently issued a joint bulletin, and it was very confusing. We had dinner with several of the lawyers from the Department of Real Estate. One of those lawyers, possibly both, will be on the legal panel that we are going to be having coming up very soon to actually answer any of your questions. It looks like they're going to uh, issue another joint bulletin. Now, this is my opinion. No decisions have been made. So as of today, which is September 26th, no decisions have been made. A meeting is going to take place that I will attend on the 10th of October, and then we'll get some more information for you at the legal panel. But they're considering three options. One is under current public escrow law, the only person that can get money from a escrow is the broker himself or herself. And that's the broker that was involved in the transaction, whether on the buy side or the sell side, but only the broker, and then it's up to the broker to distribute. The second option, which seems to be favorably looked upon, is where the broker, with the approval of the principal, can authorize that a commission be paid to the agent involved, either on the buy or sell side. Um, there are some issues with that because sometimes agents are incorporated, they may be members of teams, and so all those issues are being worked out. But that's a second option. And then the third option is to allow certain costs that were incurred, but not personal cost of the broker or other cost, but fees related to the transaction to be paid. And so they're looking at that as well. One thing is clear, no matter what they come up with, two issues will probably be very clear. One is that the principal has to know and approve whatever distributions are made. Now, the good news is both in the RLA and in the BRBC, the RPA and the BRBC, there are authorizations to be paid out of escrow. So we're pretty cool there, but it doesn't hurt. And I imagine C.A.R., who's going to be attending these meetings, will come up with a form that will work for us in regards to principal approval. The other is the only people that are going to get paid out of escrow are going to be licensees, whether that be a transaction coordinator, if they go that far, an agent, and of course the broker, him or herself. The regulations for the mandatory BRBC, excuse me, buyer broker agreements are coming out. C.A.R. did a great job in starting in, as you know, or as I've told you before, 3 months, which is what the statute says for the length of time that a buyer broker agreement can last, has been interpreted to mean 90 days. And in the December issuance of the revised RPA, excuse me, BRBC, it will say maximum of 90 days. So it will be 90 days or less, right? And that there will be written in an exception if it's a corporation or a limited liability entity, because those have been carved out of the regulation. Some other regulations that are being thrown around at the Department of Real Estate deal with artificial intelligence, with broker supervision and broker education. And so we'll keep you posted on that. I did not attend, but one of the attorneys in the office attended property management, and they had a great speaker, somebody that I've known and worked with for many years, Mary Work, and she pointed out that it is really critical that every office, whether it's a sales office, a property management office, or both, that you have a good, strong, written policy manual. The good news is the California Associations has a pretty good uh, 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 office manual that you can purchase. I have a copy of it. I've gone through it. It's pretty good. What I would suggest you do is you go purchase it, go through it, modify it in a manner that works for your company, have your attorney take a quick look at it, and get it implemented, have everyone sign for it, and then maintain it, keep it up, because things change, as you know. She also talked about something that unfortunately we've had to deal with, which is what happens if the Department of Real Estate comes calling. Again, we're going to have a couple of Department of Real Estate attorneys present at the next legal panel. And of course, you can ask them questions about what happens if they send out an inquiry, but don't ignore it. Talk to your attorney the minute it comes in. Obviously, if it goes to the agent, more than likely the broker will be notified. Um, and you should deal with it before they actually file the accusation. Typically, they'll send out a letter of inquiry before they will do an accusation. Not always, but generally. The two areas that get the most attention are, of course, from property management standpoint, as you can imagine, are trust accounting and commingling of trust money with your own. Big no-nos. You cannot have unlicensed signers on those accounts, and you should reconcile those accounts. We have a trust account just like you do, and we reconcile it every month. Um, and of course, the broker needs to be aware you're doing property management, consent to it, and supervise uh, all of it. There's going to be a whole bunch of legal forms coming out. Three of them have already been issued, or actually several. There's a federal registration form. There's a regulation that's going to be updated on December the 1st, and it deals with all cash transactions or cash over a certain amount and who's to report. Right now, that form, which was issued in September, is being bundled with the RPA so that everyone will have it. But if in fact, and C.A.R. did that out of an abundance of caution, which I think was absolutely brilliant. And what they're going to do is come during the December forms of revisions. if that regulation, which is being challenged in the courts, I will tell you, so we don't know what's going to happen. But if that regulation does go into effect, the form that you're using now will be sunsetted, and the uh, form will then be rolled over into the RPA itself because it'll become part of an overlapping regulation. So just be aware of that. There's also going to be modifications, as I mentioned, to the BRBC, indicating 90 days as your maximum. That protects you because if you go over 90 days or you fail to fill out the document correctly, the agreement that you have and all the work that you do becomes void. Not voidable, it's void. That means that you cannot save it, and you could end up losing the buy side commission. And we've seen that happen to a couple of innocent agents who simply made a mistake. So don't make those mistakes. And we're going to be covering more information about dealing with the BRBC in some upcoming programs. A word to the wise. The state statute for having a mandatory buyer agreement says that you are to have that agreement as soon as practical before you start touring, but no later than when an offer is written. And it's going to be your burden under the new regulation to show that the buyer refused to sign a BRBC or some other document such as the C.A.R, some other document. Okay, so that's okay. And I've written an article which I'm holding right now. I'll be providing it to Lori Smith for distribution to every member, or however it's going to be distributed. I don't make that call. It'll be on our website as well of how you do that documentation. But here's the problem. The C.A.R MLS rules are different. C.A.R MLS rules has no exemption for if the buyer refuses to sign the BRBC. What the rule says, and the fine is $2,500, that you may not tour an MLS listed property, which is probably the overwhelming percentage of properties for sale, unless you have a written buyer representation agreements. And that is because that's what the $1 billion settlement says with the plaintiffs in the C.A.R lawsuits that were litigated last year. So again, a reminder, and the reason that that's important is I was talking to the MLS attorney, and it was mentioned at the professional standards meeting in San Diego that the Department of Justice and other plaintiffs are monitoring compensation practices and compliance. According to the attorney for C.A.R MLS, who's one of the other speakers at the upcoming legal panel, the the plaintiffs are auditing and are asking for documentation to confirm that the MLS is compliant. So if you start trying to tour properties that are listed but don't have a written BRBC or some other type of buyer representation agreement, not only are you facing a $2,500 fine per entry, but you are also facing the very real potential that you will not be covered by the settlement agreement. Um, Speaking of the MLS, like I said, we're having the attorney for the MLS come in to do the next legal panel with us. But again, a lot of interesting stuff going on at the MLS. Most of the litigation is in pretty good shape. Most of this, the national litigation. But one of the things that's emerging, not only in the MLS, but also in your world, of course, is artificial intelligence. So we're going to spend a little time on that in the brown bag coming up. Let me see if there's anything else. We have a report that's going to be going out, and the summary from all the people that went on from our law firm to the meetings were 28 pages of summary, so a lot of stuff. So I've just covered a few things that I think are important to you. Um, uh, One of the other items that was issued recently were some modified notice to quit forms, and that's because of a lawsuit that's being appealed right now, and C.A.R. has asked for depublication, but it created some questions about how notices to quit, 3-day notices primarily, are to be served. And so they made some changes to that document as well. Also, there is a new form which I'm sure Mr. Zorn from the MLS will have comments on. It is a multiple listing service addendum, the MLSA. And so you might, I don't really, because it's an addendum to your contract, primarily to be used with the RLA. However, in my view, it's really more of an advisory for your seller as to why you want to list the property, what are the benefits of listing property in the MLS, greater exposure, all of those kinds of things. So why is an internet opt-out problematic? What happens if you delay market? Issues with office exclusives, all of that's covered, and we'll go over that in more detail when we get to that. Again, there's going to be a ton of changes. I wouldn't worry too much. We're going to do a newsletter in November, cover right now all of the revisions to the forms that are going to come out in December are in draft format. So it's a little premature, but there's going to be a whole bunch of changes to the cancellation of agency form, to the buyer counteroffer form, obviously the BRBC, to the extension of time addendums. All of these other forms are going to be revised. And what we'll do in November, when we know that the forms have been finalized, is we'll do a newsletter. And if you want to copy that newsletter, check with the association, or if you want, you can contact my law firm or me at JVG at Tyler, Tyler Law, LLP.com, and we'll put you on a mailing list. All right, I think that's it for today. Lots more. We'll cover a lot of stuff when we get together for the legal panel and the brown bag. In the meantime, you all have a great weekend and enjoy yourself and go out there and sell some real estate. Thanks a lot. Bye now.